All right, so the
Looks
first
good.
slide that we're going over today, I always like to start with a quote. So we're going to go ahead and read two quotes that we have. The segment that I have for the financial literacy and credit counseling portion of what we're going to go over today before we go over bookkeeping is called Turning Your Dreams into Plans. And a lot of the times when we start to make plans and whatnot, we don't have a real outlet on how we're going to do that. So today, that's what we're going to go over. And the future belongs to those who believe in the beauty of their dreams. This is a quote by Eleanor Roosevelt. She was a first lady and political activist. And the second quote, to accomplish great things, we must dream as well as act. And that's Anatole France, and that's a French novelist. So two quotes that I believe will kind of inspire you, if not fully inspire you. Okay. So the first thing that I want to go over with you is being honest with yourself. A lot of times when we are preparing to become business owners, or if we have a goal in mind, whether or not it's just setting up a simple savings account, paying off some debt, or, just committing to a small project, whether it be school, home, wherever, we tend to procrastinate, or, we self-negate certain things. So a lot of it is just being honest with yourself, asking yourself, a few questions. Once again, this is all financial literacy based. So you'll see a lot that, is about financial literacy. So asking yourself if you spend too much money on impulse, sitting there and wishing you made more money. Often I use my credit cards when I don't know, when I know that I shouldn't. Positive is I use coupons and watch for sales. Negative, these are pros and cons. My friends often talk me into spending money I wish I hadn't spent. Like they're telling you it's $5 movie night today over at the movie theater. We're going to go ahead and go. And then pretty soon you're impulsing on other items they have there. Positive. I pay my bills on time. Negative, I have no control over my money. Positive, I am open to new ideas. I'm willing to change how I handle my money, and I often shop when I don't need to. So the reason why we mix this up is because we want to give you an idea of general thinking. I mean, we typically don't speak out loud when it comes to anything like that. We don't like to, put ourselves out there that, this is our activities, or this is how we are with our daily habits and whatnot. So I just wanted to put that in there, and, telling yourself when you're writing down your pros and cons with yourself when it comes to budget and financing and preparation, is being honest with yourself. And that way you're able to better understand how you can help yourself move forward in those situations. Okay. The second portion of it is our attitudes about money are guided by our values, and our values are the beliefs that make up who we are. Our values around money come in part from the messages that we receive growing up, messages from family, friends, community, church. It could be from school. It could be from, wherever. So, and the question that I have is, what messages did you receive growing up? And you can feel free to turn on your microphone and ask me any questions going along if you feel, or you could just go ahead and put it in the comment box and we'll go over it after we're completed. So my question is, what messages did you receive growing up? These are some things that you could just write down if you don't want to share them. And then how do these messages affect how you behave around money and what you want for your future financial life? What are your thoughts and ideas of why it's important to save, if you have thought about this? Okay. Fitness tip is emergency savings are a must. Financial planners recommend that couples save at least 3 months of living expenses, and their individual set aside individuals that are by themselves set aside 6 months worth of living expenses. We recommend that you save that amount that you need, that you feel comfortable with, especially given that we're dealing with COVID right now. I think that is something that we all have to think of, what we do and don't save, and what we can and can't afford. Okay. The difference between a dream and a goal is a plan. So this is just basically where we're starting to kind of get more ideas of how we want to make the wheels turn on what we want to get going. A dream stability and security for my family. That's the idea versus the goal, which is to purchase a home within 18 months. So set your goals based on your values. A lot of us have values that go back to, what our grandparents taught us, what our parents taught us. And if not one of those, then what we ourselves have learned through time and school and experience. What could motivate you more to achieve your goals than linking them into your own core values? Those are no right or wrong answers for you. So a few highlighted ones that I wanted to put out there is just the goal must be written with detail. The goal should be something that you can be realistic about reaching. Does the goal apply to your values and your life? And by when do you want to reach your goals? So these are some highlighters that you could use when you're getting ready to set goals for yourself, is just being realistic with yourself and giving yourself that time frame. Can I attain this goal? And how does this, coincide with my values, my lifestyle, and my beliefs? And, giving yourself that time frame of saying, yeah, I think I could reach this goal in another year and a half, 2 years. Okay. The biggest part of being able to reach your goals a lot of the times is debt. A lot of times what we're dealing with, whether or not you're an entrepreneur, whether or not you're a college student, whether or not you're a parent, we deal with debt. So reducing your debt, tackling your debt will not only reduce stress in your life, but it'll also increase the amount of money that you have for savings for other planned and unplanned expenses. Many people feel as if they will never be out of debt, and are tempted by credit card offerings or low introductory rates and ads urging them to get debt consolidation in one easy payment. If you feel as if you're on a debt treadmill with no way of getting off, you should know that there is a way. The solution is too much debt is not to add additional debt. Understanding the cost of credit card debt, basically explaining to you, letting you know that if you had 3 credit cards with an average interest of 16% and balance is totaling $7,700, what would happen if you only made the minimum monthly payment on basically all of that? So you do the math on it, it would take you 32 years to pay off that credit card debt if all 3 of those credit cards were sitting at 16%. Because on $7,000, you would pay $14,059 in interest for a total of $21,759. So that's just giving you a general idea of debt consolidation. Okay. Debt consolidation. Perhaps you've heard, okay. How did this duplicate? Perhaps you've heard an ad that is encouraging you to consolidate all your debt into one easy payment by telling you that this is the way to get rid of your debt. Because you take that road, there are some important questions to ask yourself. Like, what is the rate a debt consolidation loan offers? It may be one rate, but if it's higher than your current rate, that is no bargain. Okay. Is the interest rate adjustable? This is like one of the biggest factors that I don't think a lot of people take into consideration, is that there are a lot of credit cards and mortgages and things that are out there that have adjustable rates. Perhaps the rate when you start is low, but will it be in a year or 2 from now? We've seen some situations, especially with the economy and whatnot, where individuals think that they're making a sound decision by saying, okay, I'm going to go ahead and I'm going to take this adjustable rate on this mortgage. They start off at 2%. If things don't go the way that the mortgage company wants, pretty soon you're paying 3%, 4%, 5% in interest. That means that you're just crawling up there with your debt. And that's something that we don't want to do. And that's in general, that's for credit cards, that's for vehicles. I'm pretty sure they're set interest, but a lot of, signature loans, even loans that you get from different places, whether it be debt consolidation student loans, any of that, you got to be very, very conscious of what the rates are, because that will affect you. At the same rate, what is the term of the loan? The term of a loan means how long is the loan? How long will it take you to pay it off? And will it take longer to pay it off than if you pay the individual debt on your own? If so, you'll be paying more interest over that long-term period. A lot of times individuals don't understand that the longer it takes to pay off the loan, the more interest you're paying, okay? And are there prepayment penalties? If you would like to pay off that loan early, do you save on the interest, or will you have to pay a fee? So make sure that you're reading through paperwork when it comes to credit cards, vehicle loans, student loans, home loans, anything that you're signing. Ask and be vigilant in making sure that you know that there are no fees associated with prepayment penalties or payoff penalties. Sometimes in fine print, it says that if you pay off your contract before the term is due, you owe an additional couple $100. Not a lot of people are familiar with that until they get hit with it. And then they're upset and they say, what do you mean it's going to cost me $300 to pay off my loan sooner than I needed to? Okay, and next, does it fix the problem or extend it? Are you locking yourself into a situation that'll force you to pay more interest on a longer period, which would only extend the debt, or is it going to help you? So we want to fix the problem, not extend the problem. Paying down debt to increase purchasing power. And this doesn't necessarily only refer to mortgages, it refers to everything, okay? So lenders look at 3 factors, and this is anywhere. This is just in general when they're looking at your credit or anything. This is just information that you want to have on hand that they do look at. 3 factors that determine whether or not you qualify for lending. So even myself, at one point, I was doing, financing and lending and whatnot. And this is one of the main things that we always went over is number 1, cash. Lenders usually expect that the buyer contributes some money towards the purchase of whatever they're getting ready to obtain. You need to have savings to cover down payment costs. I mean, that applies to vehicles, homes. It applies to, even if you go to a furniture store and they tell you, yeah, we could get you approved for this new bedroom set, but we need you to put down a certain amount of money. And a lot of times that interferes with, your purchasing power. There's even credit cards that are out there that tell you that they want you to put a security deposit. And those are prepaid credit cards. A lot of times that's probably one of the main things that they offer you when you have no credit and you're getting ready to start your credit. So that's one thing to think of. And at the same rate, 1 to 2 months of living expenses as emergency reserves, they require that sometimes. Number 2, capacity, your ability to pay back the debt that you're asking for. They take into account both your income and your minimum monthly payment on your debts, which is called debt to income ratio. Anytime that you're applying for any type of credit, even if it's a small signature loan, they'll look at your debt to income ratio. They look at what you make weekly, if not biweekly, if not semi-monthly, or once a month, and they multiply that by 12. If it's biweekly, it's 24 months. If it's weekly, it's 52 weeks. And, they just basically go down the line with it. And then they take into account what's already on your credit report. If you have anything that shows that you're paying for, whether it's errands, Sun Loan, Santander, First Financial, whatever banks you're paying, they take all of the debt that shows on your credit report and they put that budget and they subtract what your monthly income is, and they take off that debt and they multiply it by a certain amount to get your debt to income ratio. Now, credit history is one thing that will always play a factor in anything that you are applying for. Even if you're applying for a grant, a lot of times you're looking to go to get a small loan or a grant to open your business. And what they do when they do their intake with you is they tell you that we want to pull your credit. They want to see what's on there. They want to see if you're reliable. Your credit history shows a lender or an individual that you're working with that's trying to help you establish anything, your willingness to pay back your debts, and it's believed to be an indicator of future risks. We'll examine this in detail. So a lot of times your credit history is a dead giveaway of your past and your past experiences and your capability. Your credit report has a lot of information on there for an individual to go off of. And if you haven't taken a look at your credit report, I strongly encourage you to do that. Take some time to get onto Credit Karma. Take some time to get onto Experian directly, TransUnion or Equifax. There is freecreditreport.com that you could go to where they could give you your copy of your credit report for the once every 365 days for free. So it's important that you pull that. A lot of the times the main reason being is because, for one, you haven't looked at it. Two, we want to make sure that there's nothing going on such as fraud, inappropriate reporting, delinquency, anything like that. You want to monitor that. Your credit is going to be your biggest advantage in anything that you're doing. I know that, even with the program that I do, which is debt consolidation, financial literacy, and credit counseling, anytime I do intake with any of my clients, the first thing that I do is pull their credit report so that I could go over that with them and they have a better understanding of where they stand. And this is even if they're not wanting to get a loan, this is just general knowledge that we want them to have to be prepared for whatever they plan on doing in the future. Credit is your ability to borrow money, and money plays the biggest factor in anything that we're doing. We're starting a business, we're purchasing, material, we're purchasing anything that we're going to need. At any time, a bank, finance company, or a business lends you money and you agree to pay it back at a later date, you are using credit. In most cases, there is a charge for borrowing that money, either in the form of fees or interest or both. There are both advantages and disadvantages of using credit. The advantages of using credit are that your credit allows you to purchase large items that you might not have enough cash to pay for, such as a house, a car, your college education. Credit can be good for emergency situations. Credit is convenient. Using a credit card is a good way to pay for things without having to carry large amounts of cash. Also, your monthly credit card statements are a record of your purchases. Some credit card companies may offer protection against liabilities in the event that someone uses your card from you that has unauthorized purchases, such as fraud. Disadvantages of using credit. Credit costs money. There's usually a charge for payments over a period of time, or there's even an application fee. They'll charge you to run your credit report. They'll charge you an application fee. There's always hidden charges when it comes to lending, so be very cautious about that. Ask questions. Credit can tempt you to spend more than you could afford or that you can repay. You are more likely to purchase items that you don't need. And this is how credit card debt starts. This is how that pattern of debt begins, is when an individual doesn't know when to say no. Giving yourself a limit, saying, hey, you know what, I don't need that this weekend. I don't need the new iPhone. My previous iPhone's camera is just as strong, just as good. I just need to buy a new case for it and, buy a new screen protector for it. I'll be fine. We want everything brand new. We want that new purse. We want that new, perfume, or we want that new watch. So a lot of times it's easy to get caught up in these things because we think we need it. Lenders, employers, and landlords often require a copy of your credit report. So this even goes as far as employment. Nowadays, an employer doesn't want to hire somebody, especially in the finance field, if they feel like you're a liability. If you mismanage your credit, if it can affect your ability to get additional credit, get a job, rent an apartment, buy a house. I mean, even when you're applying for utilities, You know, you go to the utility department and they tell you, we got to run your credit before we could tell you whether or not you have to put a security deposit down. They run your credit and they see that you have unpaid utility bills from wherever else you may have been living. That affects you. You know, these general things that you wouldn't think would even come up involve your credit. When you make a purchase using credit, you commit to your future income to repay that debt. So it's very important to think about that because, you know, we have situations where individuals run into them spending and they commit to making that payment, but they lose their jobs. You know, these are things to think of. Lenders will report all missed credit card payments to your credit bureau, and this will affect your ability to get additional credit in the future. This happens a lot, you know, whether it's a mistake, hey, we forgot, 30 days lapse pretty quick. You forget to pay that one minimum credit card payment. And the next thing you know, you have that lingering on your credit report for 7 years. If you mismanage credit and are unable to repay the lender, they may repossess, take back the item that you purchased. I mean, they could even go to court, file a judgment on you. There's several different things that can happen. So misusing, you know, credit is another factor. Just be very careful in that. The objective for that portion of it is to understand how credit affects your financial life and to learn ways to improve your credit. Next, we'll go over credit affects your ability to borrow wisely. Your credit is one of the factors that will determine your interest rate that you will qualify for by lenders. In general, what that means is that a higher credit score means that you have greater access to lower interest rates. Establishing your credit, if you don't have a credit rating right now, you haven't tried to get a credit card, you've never, you know, been out there in the finance portion of it, simply because there's not enough information available about you. That's when it's important to meet with individuals such as myself. I have NCC staff who I partner with, and what they do is they give you information on how to establish your credit to purchase a home, to get approved for a debt consolidation loan, to get approved for a business loan. That's also something that we do. So if you are, you know, in that realm of looking to borrow for a business, you're looking to borrow for debt consolidation to get you where you need to go, you need some advice, you need some help, that is what I do aside from mentoring for UNM. So if you have any questions about that, feel free to get in contact with me. So here are some general ideas for building your credit over time. Number one, we suggest that you start by opening a checking account and do not overdraw that checking account. That checking account is basically going to be show and tell for any individual that's looking to lend to you. They'll probably more than likely ask you for 3 months worth of your checking and savings account information. And the reason being is they want to see if that direct deposit is coming in, how often your direct deposit is coming in, and if you have the willpower to maintain your checking account and not overdraw your checking account. So that's one thing that we look at as lenders and as counselors. That's something that I go over with all my clients. I look at their checking account and savings account. And a lot of times the fact that lenders see derogatory information, even on your checking and savings account, will affect whether or not they will approve you for any type of lending. Visit your bank and open a secure credit card if you haven't started your credit yet and you're afraid of getting yourself in a situation of where it might affect you. They will ask you for a deposit, or they can freeze funds you have already made in your account to secure a credit card for you. This deposited amount will be your credit limit. It works just like a credit card if you're afraid of ruining your credit or if you don't trust yourself yet. If you have paid on time for a few months, they will unsecure that card and unfreeze that deposit to say, okay, well, you know, Karen had a $300 secured credit card. She keeps depositing that $300 every time she exhausts it. She hasn't overdrawn. She's doing really good. It's been 2 months. We see she uses it frequently and she deposits frequently. We're going to go ahead and lift that security deposit off of there, and we're going to give her a credit limit of the 300 we additionally had on there for secured to 500. And then that's typically how a bank will start you off with secured credit. Make sure that your rent, your utilities, and all your other bills that are in your name are paid on time each month. I recently went down to Phoenix to a realty company to do credit counseling and financial literacy for them. And there were a lot of individuals that were there that were dealing with these situations where they didn't realize that them not paying their utility bills on time or anything was going to affect their ability to get another apartment or even get a home, you know. And one individual says, I had a roommate for a while and she was always late with her portion of the rent, and not knowing that her landlord was reporting that to the credit bureau the entire time that she was renting, she showed that she was always 30 days late paying her rent. And, you know, those are the kind of things that will definitely affect your ability to get any type of help. Okay. So credit basics, key terms that you will want to know is creditor. A creditor is the person that has lent you money, whether it's a financial institution or a business who extended you credit with an agreement that you would pay them back. A creditor, even like we see nowadays, pawn shops, banks, title loan companies, car loans, anything like that. They all have terms and conditions that they ask you to agree to meet. Examples are Visa, MasterCard, car loans, Macy's, Dillard's, TJ Maxx. All of these places offer you credit. Those are creditors. Okay, and then credit bureaus are companies that collect information on consumer credit, which is you. And those credit bureaus would be TransUnion, Equifax, and Experian. Once again, ordering your credit report, you could go to annualcreditreport.com. Under the Fair Credit Reporting Act, all consumers can obtain one free copy of their credit report every 12 months from all three of these bureaus. You could do that by going online, by calling this phone number, or writing to them to the P.O. box that's given. And once again, I'll give all of this information to Cecilia so that you guys are able to obtain it. Factors lenders consider when examining your credit report. They look at derogatory credit. Derogatory credit means a handful of things. That can be unpaid collections for utilities. It could be for loans. It could be student loans. It could be signature loans. It could be in-house financing that you did somewhere. Those are considered charge-offs as well. There's a little bracket on your credit report that will tell them whether or not you have paid 60 days late, 30 days, 90 days, 120 days, or if you just opened a loan and just never paid them back. And another pinpoint is pattern and practice. Derogatory credit is evaluated more harshly than a period of time that can be explained by unusual circumstances such as a loss of a job, hospitalization, or like COVID, what we're experiencing. A pattern of practices means that a creditor looks at your credit report and they see that for the past 10 years, you've just had, you know, a habit of paying your bills over 30 days, over 60 days. And that tells them, hey, you know what, this is high risk. I don't think we could do this right now, as opposed to maybe one time you hit a little bump in the road, you had an injury, you were out of work for a few weeks, you were in the hospital, you had a family emergency, and you accidentally paid your credit card bills late, you know, and that's something that they'll consider versus, you know, Karen's always late. She doesn't pay her bills on time. When they're examining your credit report, they look at your credit score. Your beacon score can be very low, 300 all the way up to 800. There can be factors such as a lack of credit history. That's where individuals will usually steer you in the direction of how you could establish credit. If you've ever had bankruptcy or a foreclosure on your credit, that could affect it. Public records that include pending legal disputes, divorce, any type of lawsuits. And another big factor that individuals forget is inquiries. Let's say that you're applying for a vehicle. You know, a lot of times people don't realize that when you're going over to, you know, the Dodge dealership and you're applying for a vehicle, you go in there, the dealership pulls your credit and they tell you, all right, you know, they look like they might qualify. So what they do is they take your information and they have banks that they work with and they send 3 or 4 people your information. And that bank says, you know what, it looks like these guys have potential. We want to see their credit report. So they in turn pull your credit report. Those 4 lenders on top of the dealership means that in one day they pull your credit 5 times. That can drop your credit report score from 30 points to 70 points, depending on, you know, what the nature of the lending is. So be conscious of that. At the same rate, every time you pull your credit, there's a bracket on your credit report that will stay on there for 7 years. Let's say you went to that dealership, they had themselves and those 4 lenders pull your credit, that's 5 times. You didn't see what you liked there. So you went down the street to a different dealership. That dealership pulls your credit. They have 2 more banks pull your credit. That's 8 inquiries in one day that'll stay on your credit report for 7 years. So that's something to think of, okay? Anybody have any questions so far? No? Okay. Understanding your credit score. A credit score is a number that tells a lender how likely you are to repay your loan. That score is also referred to as a FICO or a beacon score. A credit score is a 3-digit number, once again, from 350 to 850, that is generated by a computer that is based off of information in consumer credit reports that include your debt profile and bill paying history. Each lender weighs their score slightly different. The higher the score, the better eligible you are for lower interest loans. How your score is calculated. The scores are calculated from a lot of different data on your credit report. This data can be grouped by 5 categories. A percentage in each category reflects how important each of the categories are in determining your score. For instance, payment history is made up by 35%. How much money you owe for all your debt is made up by 30%. Length of credit history is made up by 15%. New credit, 10%, types of credit, 10% as well. So that is that for that portion of turning your dreams into reality. And the next one that we'll go over is bookkeeping. So you can all see my screen. I pulled up a little icon and a chart for accounting. This is just simple and basic bookkeeping for individuals that want to have a general idea of how to do your bookkeeping if you are starting or are preparing to start to taking information and having your accounting going. A lot of times what I refer everybody to is QuickBooks. That's probably one of the fastest and easiest deals that you could use. Give me one moment. QuickBooks has the ability to basically assist individuals and making sure that you have your income and your expenses all put into the system, your business name, everything that you need. Take pictures of your receipts. It's able to upload it for you. There's a lot of things that you could do inside of QuickBooks. Now, if you're going to do it on your own, this is a simple spreadsheet that's based out of Excel. what you could do is just in the top hand portion of it, when you take a look at this, it's the cost or sales. Cost or sales gives you.
A quick thing. I still see the same document as that you were sharing before. I don't see anything for bookkeeping.
Okay, give me one moment. I'm not too sure how that's happening. Okay, let me minimize that. Let me minimize this.
You might need to stop sharing and then reshare.
Okay, it says that my screen paused, so give me 1 minute. I'm not sure how that happened. Give me 1 minute. I think I'm out of Zoom entirely. Does my screen show at all?
No.
No, you might just need to pull up the Zoom app again.
Okay.
There,
Is it showing?
yeah, now
Okay.
it is.
All right, perfect. So, okay. So this would be just a general page that would give you a visual of how you would do a basic income statement. This is just basic income and expenses, costs of sales, cost of goods sold, $10, cost of services. That would basically apply to how much you pay employees. So total cost of sales, $190. Basic information that you would put in at the top of the bracket would be, the chart of accounts, transactions, just inputting general information. There's a lot of individuals I've learned through different webinars that I've attended for bookkeeping that still like to write. They use a lot of the basic bookkeeping forms, and they like to write everything in as far as their expenses versus their profit. And they like to just categorize it like that and write it in. There's individuals out there that can't do that, that struggle with it. And that's the main reason why I refer them to QuickBooks, because we got a lot of individuals out there that don't like to have to put things in. We have people that have a habit of not saving their receipts for what they spend when it comes to their businesses, to say, hey, this is what I used. I went to, go buy a printer. I went to buy ink. I bought, whatever supplies you bought. There's a lady that I'm working with in Laguna right now. We had to get her a checking account for her business and a savings account and help her with her basic bookkeeping, because when we started to assist her with a business loan, we didn't have any financial statements, which is a big portion of what the SBA will ask you for. Banks will ask you for this. I myself, even with the lending that I do, even though we're a nonprofit and we try to assist as many people as we can, we ask for those financial statements. It doesn't have to be anything fancy, doesn't have to, be from some fancy whatever, as long as you yourself as an individual keeps your basic information to where we know what's going on with your profit and your loss, and you basically expensing everything the way that it needs to be, so that we have a general idea. This individual that I was working with, all she was doing was summing up what she thought she made. And we didn't have any real receipts to say this is how much we were spending on expenses to tell us what our profit was. So we had to help her get that in order and get it in line to where when she did a deposit, it was for, catering services, versus going through her books after all of that and realizing, okay, is my business making a profit? Is this, sustainable? Is it lucrative? And also giving her resources to where she had an outlet to buy wholesale. We try to help individuals as much as we can to better understand how to make their businesses work. And, what works for one individual might not work for another. There's individuals out there that are very quick on picking things up, whether or not it's getting into a computer system and getting into QuickBooks. and taking a quick tutorial and saying, hey, yeah, I could do this, versus other people that are like, no, I can't do that. I can't log onto the computer. I don't get it. It's easier for me to write down my expenses and do everything by hand. So whatever your preference is, there's ways of doing it. And if you go online and you even, you could go into Excel, for instance, and this is just a basic spreadsheet that you could create on your own. You could go in there and you make your own modifications. You're able to add these charts. You're able to add, basically it'll calculate everything for you if you go in there. It's basic. It's as basic as it can get. And then once again, like I said, if you decide that you want to go with QuickBooks, their apps are so easy to use. There's an individual that runs a heating and cooling business out in Albuquerque, and he struggled with that until, you know, I was telling him you could just upload your receipts. You don't have to keep a shoebox next to you or keep a box next to you. As soon as you get out of Home Depot or as soon as you get out of wherever you went to buy your supplies, take a picture of that receipt. It'll upload it to QuickBooks for you, and you can, you know, reconvene to basically say whether or not that was an expense or whether or not that was a profit for, you know, your business. So, you know, there's different ways of doing things. Does anybody have any questions in reference to a spreadsheet?
I think we had one question in the chat that said, have you used Wave?
No, I have not. No, I have not used Waved. Personally, what I have seen and what I have used is just Excel and referring individuals to QuickBooks, because QuickBooks is something that you can go to Walmart. You know, you could just get the software for it, upload it. And then if you have the time, but you don't have the resources to turn around and purchase software like that, then get into Excel. Make yourself that spreadsheet. It could be as simple as what we're looking at right now. Just putting your basic information at the top, putting the business name, make sure that you're putting the date. A lot of times we go in and we forget that we're going to do that. We don't put in, you know, independent contractor services on January 4th, 2018. We don't put in, you know, all of the stuff that we need to. We got to just make sure that we're dating and timing everything as well. That's another thing that I didn't put on here, but just to give you a general idea of how you're going to come up with what your gross profit is, what your expenses are. And, you know, this is what you're going to go based off of going through your business, whether it be a year or 5 years, and you want to get your profit and loss to see where you're at or how to better maintain or address your expense issues. These are just basically going to give you basic calculations to create your financial statements and track and create invoices if that's what you're doing. Create your monthly expenses so you have a general idea of what your expenses will be from, you know, the beginning of the year to, you know, middle. I don't know how everybody is looking at their businesses. You know, how are you planning on reporting? How are you looking at things? Are you looking at things in a sense of, okay, my first, you know, quarter, I typically do good, you know, second quarter, third quarter, you know, everybody looks at their information differently. Every business looks at, you know, the profit and loss season. I've worked in banking. Once again, I've worked in finances, and growth season in those times and whatnot that we would look more at would be September all the way to February. And then from February to about July, you know, we always knew that we were going to be losing. That was going to be our loss season. We weren't going to make any type of profit. We were probably going to suffer. We were going to lose a lot of ledger. We were going to lose a lot of clients. And we would always try to come up with a strategy on how we would retain clients or how we would retain customers and how we would grow our ledger to make sure that we sustained and how we were going to do things different. So in order to track all of that, we also have to, you know as an entrepreneur, how we're going to break down our business. Are we going to do semi-monthly, quarterly? Are we going to look at, you know, when our growth season is, when our loss season is, you know, like what general information are you looking to get? How do you want to set everything up? Do you want to make sure that you're using a spreadsheet that you're writing? Do you want to make sure that you're using any kind of apps or, something like QuickBooks or anything that's out there. How do you want to set everything up for yourself, and how good are you at maintaining your expenses and make sure that you're inputting and reporting properly, or if you have everything in line for your taxes, everything like that. We want to make sure that you have all your general information for that. Is there anybody that has any questions in reference to a spreadsheet or anything in that reference, or how you would separate what expenses are or what your profit is? In the expense portion of this, you see a total list of what we classify as expenses versus what profit is.
Could you maybe go over that a little bit?
Yeah. Okay. So in our general information for sales, anything that has to do with sales, anything that has to do with hourly wages, anything like that, we're always going to include it in a portion of where we're taking that out of. Okay, let me restart. Okay, there's going to be two different brackets. There's going to be the top portion, which we separated to show what our profit is. That's going to be, okay, if we have Linda, she makes oven breads for Acoma. She does, 80 loaves every other day, and she's charging a certain amount for that. We're going to put that in the cost of goods sold. So we're going to list all of what she made in there. And then when we go in to separate our expenses, the first line we would put, flour. How many bags of flour did we buy and how much did it cost us? We want to know how much it cost us to be able to make that product. We're going to put that in there. We're also going to put in there as an expense, like let's say if she has to bag the items. Let's say if there is a certain protocol for COVID because she has to follow certain, regulations. I know for a fact that they have to have labels, even as far as labels, if you're having to put an expiration date or any kind of information on there, we'll list that under printing. Even let's say that she has a certain logo that she wants on her oven bread that she placed, and she's getting those labels printed as well. We're going to list that as an expense. If she had to buy a new mixer to be able to, maybe her old mixer gave out, she had to go over to Sam's Club, buy a new mixer. We're going to list that as an expense. Do we pay any insurance payments that tell us that that's what we have to have in order to run a business? Do we pay any interest to anybody for any of our services or anything that we're doing? Do we pay a lease for the space that they give us at the grocery store? Do we pay for any lawyers or accountants? We list that as an expense. I know that there's licensing and fees associated with every business. So we list that as an expense, like if you have to get a food handler's permit, if you had to go for training, if you had to pay for your business license, or if they ask you for any other type of licensing that you need or credentials that you or any of your employees will need. Marketing and advertisement. Let's say that you wanted to make some pamphlets or business cards. We're going to list that under expenses. Let's say that you're sitting down with City Market and you're telling them, hey, I want to sit down with two individuals from City Market, and you want to pitch your product to them. And you want to tell them, hey, we want to be able to set up our oven breads over in your store. You can even list your lunch for, business related purposes under expenses to say, hey, I took Samuel and Paul out to lunch to pitch them our business plan to see if we could get this, ball rolling, and if we could start selling our breads out of, City Market or whatnot. You can list that as an expense. Obviously, your cell phone, internet, your utilities, if you're running your business out of your home, you always want to make sure that you list those items. But once again, for reporting purposes, if you're an LLC, a sole proprietor, or whatever the situation may be, all of this can vary. A lot of the times we see more LLCs with anything. Sole proprietor would be somebody that's pretty small, but you could still count off quite a bit of these expenses, especially if you're paying rent for any kind of your spaces or anything like that. Make sure that you're keeping all of those receipts. If it's business related and you're running your business out of your home, you're using your cell phone, you can add that. If you're having to use Wi-Fi in order to get internet service or anything like that, you could use that as an expense to write off. A lot of LLCs do this, especially when they're contracted. They'll charge the contractor that they're working, they're contracted, however much it's costing them to do any work. Let's say that postage and shipping, you got to ship your bread out to, Arizona. Somebody ordered so many loaves and you got to get that product out there. Shipping or anything like that, you put it under there. If you're
We have a question from Anissa. Go ahead and unmute yourself.
Yeah, my question is, you had mentioned if we're using our phone, internet and stuff like that for business, that we can keep that in our books.
Yes.
For example, like I do a lot of marketing for my business, and it's probably about a third of the time. How would I go about putting that in the expenses? Would I just put that for the whole phone bill in there, or
what you would do is you would break it down. So you're saying that you use a third of it. So let's say that okay, let me see. Let me pull up my calculator. Let me give you a quick idea. What we're going to do is, let's say it's $90. That's your phone bill. And you're saying you use a third of it. So you divide that by, 30. And that's going to be $30 that you're taking off and you're putting to, because you're not saying that you're using that consistently. The only time that you would charge 100% is if you're consistently using that cell phone for that purpose. Now, if you could break it down and look at your phone bill and say, hey, you know what? I'm on my phone for this business about half the time that I have my cell phone in use, or if not all. Now, we would do 100% if you're consistently using it day in and day out, and that's their only point of contact for whoever you're doing marketing for, versus if you know that you're only on your phone maybe an hour or two a day and the rest of it is personal. So that's how we would separate that. But if for instance, like with what I do, I'm executive directing. So anytime an individual needs to get a hold of me, they get a hold of me on my cell phone. And that's 24 hours a day, 7 days a week. I tell them all the time, if they're going to either text message, email, call, that's going to come through to me on my cell phone.
Sure. Okay. Well, thank you. I appreciate that.
Definitely.
Will you also touch on taxes, like for bookkeeping as well?
Yes. When you're getting your taxes done, once again, that's going to fall right back into the realm of how do you have your EIN set up? And if you haven't applied for an EIN, that's probably one of the simplest things that you could do. That should have probably been one of the main things that I went over first before we jumped into anything else for bookkeeping. Do you have an EIN established?
Yes, I do.
Okay. So that takes about 3 minutes of your time. Anybody else that's on the call that doesn't know that, what you can do is you just simply log on to the Internal Revenue site and log in and put EIN setup. It'll take you to that platform to where you need to go. You enter your general information and they'll give you that EIN number. During the time that you're doing that, they're going to ask you whether or not you want to establish as a sole proprietor, an LLC, a corporation, or whatever the business form that you have is. And how is it that you're filing? Are you a sole proprietor?
I'm an LLC.
LLC. So LLC, just the way that you see this right now, how you're going to do is you're going to have January, February, March, April. You're going to have your expenses set up for every month. And you're going to do your spreadsheet for every month, and you're going to do it in 30-day to 31-day increments, depending on how often your business was opened. You just basically started off the first, go all the way to the end of the line. And you could set that up, using the days of the months on the spreadsheet, or you could set it up just as we have shown and just go down the list and add it all, but put the dates next to it, because you get charged once a month for cell phone, you get charged once a month for internet. You just want to have a general idea when you're going to the individual preparing your taxes. because once that happens, they're going to say, okay, well, where are your financial statements to show us what your profit and loss was, so that we could show, okay, like for this month, total expenses was $1,887.85. And their profit was 508.15. Give me one moment. So basically 2396 was what they made for the month of January, but their expenses out of that was 1,887.85. So it's showing us that their only profit for that month was 508.15. When you're doing your reporting, they want to know what you made for that month to show, okay, well, she made 508.15. And is that going to be the same the next month, or is the next month going to be a month where she made 1356.14, you know, whatever the amount might be? They break it down to where they know how much you made for the entire year. And that's subtracting your expenses, because that's how we do business reporting. You're able to take off all those expenses and everything that you have, but they want to know what you made for the year. So that's why it's important to have your financial statements and keep everything month by month. That way the individual doing your taxes knows how to separate all of those expenses. Because when we go in to do taxes, there's going to be different brackets that ask you, okay, so if you are, you know, an LLC, how much did you spend on your phone bill? And if you are an LLC, I'm guessing, and this is just the way that I do it, I take a screenshot of my cell phone bill, so that by the time I get my W-9 from the individual that handles our taxes, there's proof already that, you know, this is exactly how much Verizon charged. Same thing with Xfinity, is $69 for internet. Everything is set up right there for them to where they could backtrack and say, well, this is how much was expensed for that month. And all of that is included in what they include in my W-9, right? Because I'm contracted. So LLC, when you're filing, when you sit down with the individual doing your taxes, let's say that a contractor pays you and it's a flat amount. It's based off of the invoice that you gave them, saying that this is how much it's going to charge. I'm going to charge for my time. This is how much I'm going to charge you for phone, internet, and supplies. And that's how you're breaking it down to where they're already paying you in that. But you, when you go back to do your taxes, you need to sit down with the individual doing your taxes and also be able to supply proof to say, hey, you know, this is where I have proof of all my expenses. These are my copies of my receipts. This is the copy of my receipts for my computer that I had purchased. This is a copy of the receipt for my internet, phone, and utilities for the past 12 months. They're able to go back and reconcile all of that to let, you know, the IRS know this is what she's made versus this is what she's paid to keep her business going. That way it gives them a general idea of how much money you've really made, what your profit and loss is.
That's really helpful. Thank you so much.
Definitely. And a lot of times I tell everybody, I know it sounds hard, but take that quick screenshot, go in there like it's clockwork. If you have, you know, internet access or these mobile apps, go to download that PDF file of your bill. That's what I always do. And I screenshot the first page, and I always, you know, crop that. I keep that in my files. And when I'm emailing any type of invoices or I'm doing anything, I have a folder set up in my drive that says expenses. And that's where the receipts for the phone, internet, utilities, ink for the computer, a laptop, printer, anything that you're spending money on to run your business or to do what you're doing is an expense, whether you had to buy pens, whether you had to buy, you know, a new, anything that you're using for your business is an expense. So you want to make sure that, once again, even if it's a shoebox, like I told this individual, put your receipts in there. Take that time out of the day. If it's the day and it's not a lot, I encourage you all to get into the habit of getting your reporting done for your expenses that day. It's out of sight and it's out of mind. If you wait 30 days, you're going to have 50 plus receipts. You're going to be sitting there with a headache 4 hours later, you're going to keep going back and forth because you're like, oh, I should have did this on this day because now I have the 15th. I have another receipt here for the 3rd. You're going back and forth. You're going to overwhelm yourself. Mistakes are going to happen. You're not going to be accounting everything. So make it a habit to sit there, get into your Excel, get into your QuickBooks, and put your expenses in the same day that you know you made those charges. Get into the habit of doing that because it's going to be very easy to mess yourself up. And at the end of the year, when you're doing your taxes, it does catch up with you. And it's very easy to lose a receipt. We all know that. So that's why I highly encourage use an app, screenshot, if not take a picture of that receipt so that you could put it into that file, email it to yourself, do what you need to do with it to get your reporting done right. And remember, if you're traveling for your job as well, you're using your personal vehicle. You're using the car that you purchased and is registered in your name. You're an LLC, you're a contractor, and you want to write down that mileage. If not, then you want to keep that receipt that you filled up gas on the 13th, and that was one way. You filled up gas coming back, that was one way. You keep those 2 receipts, and even that, because that can add up, the gas and, auto expenses. Let's say that you had to pay for vehicle repairs or anything like that because something happened on the road. You need to be vigilant and make sure that you're keeping track of all of that, because this is stuff that at the end of the year will add up. If you're using your personal vehicle for your job and you're doing contracting or you're an LLC, you can also include those insurance payments that you're making on your vehicle inside of your spreadsheet. So these are all things that you can add and that you want to keep a track of, okay? Okay, so Trish, what I'm showing is just a basic spreadsheet that you could upload so that you're able to have a basic spreadsheet. Like, let's say that you decide that you want to write down your expenses. This is all it is. You look up here on the top left-hand corner. This is what you're saying you've sold for the business, your cost of your goods and services. And then gross profit based off of what you've already sold versus your expenses, stuff that you've already expensed and that you're paying for.
All right, do we have any more questions for Mytegia before we sign off?
Can we have your contact information in case there's
Yeah,
any
let me
questions?
put that in the chat. And then, like I said, it's not just the financial literacy and credit counseling that we do. If you are looking to start your business and you have the basics down for what you need and you need a business loan, we help with lending. We help with debt consolidation. We can help you with your credit reports. If you're having issues with your credit reports and you feel like you need help understanding that, we're able to help you with all of that.